Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Battista. Got my man, Mike Butler, and of course, Ryan Grace is in the house with us today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my guys, Mike and Ryan. Ryan, good morning. How was your weekend, sir?
It was great. Yeah, I got out. I did a little bit of hiking.
Ooh.
Well, I don't know if you can call it hiking. It's more walking on a semi-paved trail, Waterfall Glen. You guys are familiar
where
with
is
the
that?
area. Kind of southwest of the city.
Fun.
Palos Hills area, that direction.
Oh, look at this.
Get on 55, and the next thing you know, you're hiking.
Yeah, it's
that.
hey, it's good to be mobile. We were talking about, Tom not being mobile enough. It's good that you're starting early
Yes.
to move a little bit.
So got out in the sun, enjoyed the weekend. How were your weekends?
2,500 acres. Wow.
Yeah, it looks kind of nice.
This is nice.
Yeah, you got people running, biking, walking, having a great time.
I like
See it.
this. This is a little outdoor activity. I like this.
Yeah.
What'd you guys get into?
Golf.
Yeah, golf.
Mother's Day.
Yes,
Stuff.
mommy day.
UFC fights. That was it.
Yeah. At a very early tea time on Sunday, Mike nearly destroyed such events with his
We went
Saturday
out-
activities.
Yeah, we went out for the UFC fights on Saturday.
Yeah.
Okay, what time was the tea time?
8:30.
Okay.
Well, it's an early one, but
Earlier, yeah.
when you're driving from the city,
Right,
8:30 means like 7:15. It's
true.
You leave. So it looked like it could have been a missed tea time.
Yeah.
Woke up in a
Uh-oh.
sweat.
Panic.
Just a panic, yes.
Classic.
But it worked out great. And the best part about it is, my performance was pretty top tier for my performance.
Hell yeah.
So, the libations helped.
Yeah. So are
Got me
you
loose.
trying to thank me now? You're
No.
With a whole 180?
No, not gonna 180.
But yeah, beautiful weekend here in Chicago.
Yes.
Happy belated Mother's Day to any mothers watching or listening.
Yes. Happy Mother's Day.
What do you think of this little market here?
Is it over? Is it done? Are we back to
I think
highs?
we're back.
Oh, yeah, we're back to bullish. Absolutely.
Yeah.
I think you want to trade the ranges, though. I took a little bit off of my ETH position.
Yeah.
I mean, this is a position where I was adding to it, well underneath 2,000. So 1,700, 1,600 for a second when we got down there. But yeah, I think in terms of, where do we go next, or are we back to that bullish trend? Mm-hmm. Absolutely, with crypto. I was talking about, you want to be in what's working. I've been leaning long or heavier on Bitcoin. Clearly that was the wrong trade over the last week where you got ETH up like 40%, maybe higher. But it's still something where I think you want to be overweight the larger market cap stuff. Mm-hmm. You're seeing some early signs of a rotation, but I'm not going to call it alt season just yet. But yeah, absolutely. The bottom was in at 75 in hindsight now, but we talked about that for a few weeks, over a month ago. But yeah, I think going forward, look at the back half of 2025. I think you're definitely going to be in a better environment for crypto prices. I do think that you'll see a new all-time high with Bitcoin.
I love it. And we had, to parlay that into just financial markets and equity markets specifically, a lot of things happened last week and into the weekend. Do you think that's overall bullish? Obviously, for risk assets, you got to think that the whole situation is bullish for crypto as well.
Yeah, certainly.
Like the tariff situation, I mean.
Yeah, absolutely. You have a few more, I guess, knowns now versus where we were before. Yeah. I don't think we're necessarily out of the woods just yet.
Yeah.
But yeah, in terms of the economic environment that you're likely heading into, things are getting a little bit better on the tariff front. Certainly a more positive environment than what we saw going back into April and March.
Mm-hmm.
Yeah. We almost have a point of contango now between the K and the M and the Q contracts in vol futures. So backwardation is done, at least right now. And we're seeing the markets rip higher, and we'll see if it continues. But John in the YouTube chat asking how we could have looked at the previous expected move for the weekend in SPX. It looks like it was about 70 points. Just looking at the straddle price.
Yeah,
So basically, you just look at the previous close in SPX, which was on Friday was 56.60. We'll call it. So you take the straddle price of 56.60 and you subtract the net change from that. So the straddle price currently is 14,500. But if you look at the net change of these options, you've made 11,000 on the call side. You've lost 3,600 on the put side. So if you subtract the difference there, that's about 70 points, which is what that straddle was trading for at the close on Friday.
Yes.
Was 70 points for today's expiration.
Yes.
And that's your expected move ultimately. So
good little trader hack.
Yeah, about a 2 times expected move into the open today.
Yes.
So big move.
Yes.
Huge, some might say.
Huge. He told us to buy. It's the second time he's been right.
Yeah, regardless of who the president is, when the president tells you to buy stocks, it seems to work out.
Yeah.
In this case.
There's usually a reason,
right?
Maybe you'd think, but yeah, this is kind of crazy. We're back to a lot of stocks. We're back to where we were before the whole tariff thing.
Yeah. Been quick.
As if it never happened.
Yeah. How are you guys trading this? Are you adding to positions here, trying to ride momentum? Are you taking some off of the table?
I think, and we've been talking about this for the last couple weeks. I was leaning long into the moves lower, and I was long when we were higher too. So I've been kind of buying these dips, and the velocity of the move and the volatility staying high too, with a lot of the trades that we've been doing, like call diagonal spreads, crab trades, they're synthetically long for further out volatility. So you want these big moves, and you get them really quick, a couple days, a week. I've been more aggressive with taking profits and not being, not looking back on those trades. So I'm actually leaning basically flat to slightly short delta here, just given the moves that we've had, because I've been slowly taking off long delta into this trade. And I feel like that's how you have to approach these markets, because things are going, and even with the vol contraction that we have today, 19 on the vol futures, it's still relatively high. Like, we're not at 12 vol. Like, this isn't the nothing market. This is still a market that can move. And so I think that's how I've been approaching these markets, is just kind of, leaning into the directional moves a little bit as they happen on the other side.
Yeah, today, this might be the most active I've ever been.
Yeah?
This morning. Because I closed 1, 2, 3.
I mean, you're getting 4, 5, 6, 10% moves in a single day. I know in the crypto space, that's like, a couple hours, maybe an hour, minute. You can see that stuff move 10%.
Pretty used to that.
Yeah. You're dull to this. But in the equity markets, stuff doesn't move that big on a day-to-day basis. And I think people get, caught up in, if it continues, I'll make X amount more, instead of I made 20% overnight. And this is a mega home run.
Yeah, especially in relation to the expected move. Like, we had a bunch of bullish call diagonals on, and we got a 2 times realized move in the E-minis. I took off 12 positions today, like close. Some were winners, some were scratches that were losers. Some I readjusted. So there's a couple of that I closed and then reestablished, a long July, short June, like a wider one.
Yeah.
But yeah, very active day. I made 12 trades this morning within 2 minutes.
That's good. Yeah. That's good.
Crazy.
I like it.
Yeah.
Quick little market update just to give everybody what's going down. E-minis up 148. They've been very, very flat since the open. I think they were up about 180 was kind of the high. 58.65 was the high of the session, so about 40 points higher from here, so about 180, 90-ish. From the open, they've chopped around this up 150 mark pretty much the whole time. You've got the NASDAQ up 668. It's been the strongest of the group, about 100 to 200 points off the high. We got just under 21,000 on the NASDAQ. You've got the Dow up 900. It was up over 1,000 earlier this morning, and the Russell up 60. The Russell was higher this morning as well, up about another 50 or 60 points. So everything has been kind of chopping around where we're at right now, up between 2 and 3-ish%, with the NASDAQ outperforming everything else. Oil catching a little bit of a bid, /CL 62.19. It got as high as 63.61. Oil volatility in terms of price has been wild in both directions. Volatility itself in oil has been relatively range bound, but it's been kind of that recession fear, not recession fear, trade war fear, war fear. It's been, there's been a lot of things that have been moving oil around. Probably helps your position, Mikey. Volatility, as we mentioned, 1920 here, down over 12%. It's been a massive volatility contraction, but still relatively high when you think about the VIX itself, still at 19. This is historically about average for volatility. So we're right where you would think it would be at some point. Bonds down 24 ticks. Rates have stayed high, if not gone higher over the last 2 weeks or so, contrary to what everybody was thinking just a couple weeks ago, with rate cuts getting pushed further down the curve here. Gold has gotten absolutely killed over the last 3 or 4 sessions. I think it's down about $300 from the highs, got up to almost 3,500, 34 and change, 34.50, 60-ish. We're now at 32.35, along with silver taking it on the chin a little bit. And then, as Ryan alluded to, Bitcoin has had a very nice rally, given up a little bit today, but it's nothing but a blip on this chart, up to 102,000 right now. I think we got to 105 and change overnight. 105.7 was the high of the overnight session. And then ETH, we got to bring that up now because it's floating around 2,500 here. It's had a very, very nice rally, along with just pretty much everything in the Bitcoin space.
Yeah, we're back, baby.
We're back.
Yeah, maybe we never left. I don't know.
It's true. We never left.
I mean, it's a huge move in Ethereum.
Yeah.
Especially relative to Bitcoin. It's actually happening. Bitcoin's down, Ethereum's up.
Yeah, this is the first time in a very long time that we've seen some positive signs when you look at that ETH BTC ratio. Mm-hmm. The trend is still terrible in there. If you look out on you look at the monthly, weekly, but when you look at the daily, it's definitely a little bit better. But I mean, how much lower could it go, really?
Of course. Zero, if you ask some people.
Yeah, possibly. So you're getting a bounce there. And like we've talked about, these can be wildly volatile at times. And then that volatility is subdued, and then it rears its head again. And that's what you're seeing here. But if you go back 3 months ago, ETH collapsed 50%.
Yeah.
So you've got a bounce. This is historically what we've seen it do. You go back to Bitcoin for a second, same thing, right? Within these long-term or kind of longer-term bull markets, you quite often get 30 to 25% pullbacks. Mm-hmm. And that's what we saw, down to about 75,000 from the highs, roughly 30% or so off of those highs, and you've bounced back. We haven't made a new all-time high in there. I think that you will see that. I think you also will see a little bit of chop here. You might pull back underneath 100,000. Remember, it's just a number. Yeah. But ultimately, as we move forward over the next 3 to 6 months, I think that the conditions are ripe for higher crypto prices. But we forget how volatile it can be, and then we forget just how much it can move even more so to the upside when you do get those bounces. And I think you're seeing a little bit of that here today. But I wouldn't be surprised to see ETH kind of take a little bit of a breather after the big move.
It seems fair after a 40 or 50% move to have some cooling off, or it just goes straight back to highs. It's funny because for me, into the 50% down move, it's not really talked about And then you get these like 30% moves, and all of a sudden it's just like a rush to talk about, the crypto space. It's funny how that seems to work. It's the fear, the FOMO is strong in this space.
Very, very real. And I guess the fear is very real on the downside. I mean, outside of crypto, we were seeing people talk about, or hearing people talk about, this is the end of free markets and free trade and the global economy.
That's my favorite.
It's all over, and it would be the most dire future you could possibly ever imagine. That was a month ago.
Yes.
Right? I think sometimes you have to, obviously you got to sell that volatility, buy the dip. And then on the other side of that here too, you have to try not to be too greedy at times.
Yes.
If you were buying ETH at 1,500 or 1,600, you probably want to take a little bit off the table at 2,500.
Yes.
Maybe you missed the move to 10K. I don't know.
Yeah.
But for me personally, I like to take some profits when I have bigger trades like that, right? Assuming that you weren't fully invested in it when it went down 50%. You have a little bit of dry powder, put it to work, trade around it.
Yeah, and that's really the only thing you can do. And we were kind of talking about this before we got on the segment. That's really like trading around these price movements in crypto is really all you can do, because there's no derivative market. There's no way to go in US-based derivatives markets. Maybe, hopefully soon, there will be something like that. But there's no way to sell a call into this move or collar off your position or do any sort of like strategic kind of trade there, that short volatility or positive decay that doesn't exist in the space other than like an IBIT or ETH, which I have actually been trading recently. I put on a trade last week and I had a covered call in there, and it's not super liquid, but it's getting more usable. Those are really the only ways that you can kind of dabble in the hedging of a spot cash position.
Yeah, I guess if you have a large enough cash balance, you could go into those micro futures. But to your point, it's really trading around the options on those ETFs, which I've been trading a lot more in IBIT as of recently.
It's great. I think it's a great trade.
It's the best.
I think it's a great.
Simply the best.
Tom poo-poos it because like one time he didn't get filled at mid-price, so it's been.
I mean, they're 3-cent wide markets.
Yeah, it's about as good as you can get. You do have to kind of move, but it's a high volatility. I mean, it's what's the implied volatility on it? 70%?
50%, yeah.
Yeah. I mean, so, it is what
it is. IBIT is a magical little underlying. And you can do literally whatever you want in there because it's a $58 stock. Like, even if you have a really small account, you can do a lot of different strategies in there. So love IBIT for sure.
Yes.
Should we pop over to the slides? Get a little update here in the crypto space.
Yeah, let's do it. And if you got crypto questions, you can throw them in the chat. Mm-hmm. Anything on the tastycrypto wallet, we have that up there as well. So we can jump.
Yeah, that portfolio is looking a little bit better from where it was.
Yeah, definitely. I think what was our low mark? Do we?
It had to be 800. No, unfortunately, there's no historical P&L in there, given how it works. Yeah. It might be a nice feature that we could bring to it at some point. But if I recall correctly, it was probably half of what this was.
Yeah, I remember seeing kind of low numbers.
Yeah, so there's a bunch of just kind of crap in there. But you can see some of the residual tokens from when we tried bag battles before that stuff just blew up by 80%. Yeah. Had some fun there. Coming back a little bit.
Love it.
I got the Tasty Crypto newsletter pinned to the top of the YouTube chat. So if you want to join us there, you can click on that, sign up for free. We'll get to some questions after the update here.
Cool. If we want to pop the slides up on the screen, we'll run through some of the numbers. Talk about the expected moves as well, given these levels of volatility. Mm-hmm. But if we've got, do you guys have it up? There we go.
Yeah, there you go. You got it on your side, Ryan?
Yeah. Good to go. I don't see it on mine, but that's okay. I've got the numbers in front of me here. So when I put this together this morning, we had a Bitcoin price a little bit over 103,000. We're a little bit lower at this moment, but you can see a lot of green on the screen. My favorite color.
Yes, I love green.
wrote about this weekend. Thanks for plugging the email. But yeah, Bitcoin, a slight laggard here, even though still year to date, this has been the relative outperformer. So Bitcoin up about 10% in the last week, pales in comparison to ETH up 40%, and a few others here. Doge up about 40%, Solana up 23%. As you can see, volatility picking up a little bit. So we look at realized vol for most of these tokens as there aren't options markets. Realized vol back into the low to mid 80s versus the high 70s. So a little bit of a pickup there, though Bitcoin implied volatility is still really low. We go back to talking about IBIT. I think there's an opportunity to buy longer dated call options at the 70, 75 strike is where I'm at. We'll see if that works out or not. I started to buy those a couple of weeks ago. But volatility has been relatively cheap in there versus where it's been historically. Not so much the case for ETH. ETH volatility is starting to pick up a little bit. Implied vol for ETH at 74%. But on a daily basis here, when we look at our price momentum and we're just measuring the exponential moving averages in there, we have a lot of bullish or buy signals, if you want to call them that, on the daily basis, but you really still haven't seen that flip for ETH on a weekly basis, neutral on a monthly basis. So this is why even just a couple of weeks ago, I was talking about just sticking with what's working, because you really haven't seen those signals that hopefully you do see that precede possibly a much larger run in ETH. It feels great to see this move here, but we're still down 6% in the last 3 months. This is still down 35% year to date versus Bitcoin. Same thing when you look at Solana, down 17% year to date. So hopefully the pop in some of these alts continues.
Or stays at least. Fed starts a little bit of a base here.
Exactly. But, up until this point, it really has been Bitcoin outperforming, and we've seen that with a lot of our signals. Those signals to go bullish on the daily, weekly, and monthly never broke down, but the weekly went to neutral for a second. They all have moved well ahead of any of the alts. That said, there are some signs when we look at Bitcoin market cap dominance, which we'll check out in just a second, that might be indicating it's the beginning of possibly a rotation in there. But yeah, positive momentum here in the short term. Still looking for some of those signals that'll get me very bullish when we see the weekly go from red to gray to green there, my favorite color.
Yes.
Let's look at a few more of the alts. Really the same thing, same theme, just with more volatility. I don't know if anyone is trading Aave, for example. That's been whipping around. You've had some big moves in there, up 65% in the last month. SWI at the bottom of the chart or the table there, up 83% in the last month, trading at 122% realized vol on a 30-day basis if you annualize that. So again, same signal or signs here that we're back to that bullish daily price momentum, but you haven't seen that kind of evolve into that longer term trend that we'd be looking for, with the exception of SWI, which is bullish across the board there.
Is there one particularly that you're kind of looking at? Because on the first page we had Doge, which was, which I kind of associate with high beta play on high volatility, for volatility to continue, you'd expect to see like kind of the lower tier stuff move much more, which you're seeing here. Any of these kind of stick out to you as an interesting one, or any others that you're kind of focused in on currently as a high beta play?
Yeah, in terms of where I see opportunities, and these are tokens that are either outside of what's offered at tastytrade or the tastycrypto wallet. BitTensor, Tau, something what Dan on our team wrote about over the weekend, something I think we've talked about here on the show before. That's interesting to me. But just looking at, okay, where are we seeing the most positive or bullish momentum, and then where would I want to buy those dips, more so. Those are going to be things like SWI, XRP, Bitcoin, certainly. We're hopeful that we see a continuation of the rally in ETH. Solana has traded relatively well. I think Solana at 177 could go back to 200. Top end of the range on ETH is probably closer to 2,800 on a 1 standard deviation move. Bitcoin looking for that to go back to about 110. Right, those would be the areas that, if this continues, we should just trade into. given 110 or right around there was the prior high. But no, for the most part, I'm still just sticking with larger market cap stuff.
Okay.
But you can catch some big moves at times in Aave. In SWE, Bitcoin Cash even has been whipping around quite a bit here. It's back up to 400 or just a little bit above that. But yeah, SWE has probably been the best one for me recently. Just kind of luck out at once in a while.
Yeah.
But you catch an 80% up move in a month or 100% up move in a month.
Do you manage that position?
No, I haven't really taken anything off.
Straight up diamond hands.
I think it ultimately, like a lot of these, goes to new all-time highs. But with some of my larger positions being in ETH and Solana, when I've had an opportunity to take a little bit off the table in ETH, I've looked to do that.
Okay.
If we break 110 in Bitcoin and we move into, let's say, 120, 125, I'll probably take a little bit more off the table. But I'm kind of just hopeful that happens.
Yeah.
We shall see.
Yeah. Very nice.
So that's a quick look at performance. Pretty bullish over the last week, over the last month. We know that this can all change rather quickly. It moves fast. Mm-hmm. Let's jump to the next slide for a second. Couple interesting signals here that we're looking at. So Bitcoin market cap dominance has come down from about 66% to 62%. And if you want to measure momentum in a similar way, you do have a sell signal on a daily basis. So you're starting to see a little bit of a breakdown in that trend of Bitcoin market cap dominance. So that's just measuring Bitcoin's market cap versus the rest of the kind of tradable marketplace. Same thing with ETH. Got the very early bullish signal on the daily there. ETH BTC ratio up 27%, 30% basically in the last week. Solana versus Bitcoin as well, but Solana underperforming versus ETH. So ETH finally outperforming, at least over a very short-term time period, outperforming Solana there. And then you see that big move, as we often do, in the higher volatility stuff. So Doge versus Bitcoin for a second here, up 25% on the weekly basis. But still structurally, right, we haven't seen any real shift in the trend. So when I look at ETH versus Bitcoin, it's still bearish, though you got a nice pop here in the last week. When I look at Doge versus Bitcoin, going either further out on that kind of risk spectrum, still bearish, but got a nice pop here. So maybe this evolves into kind of a more of a bullish trend. But right now, you're just seeing kind of a little bit of a bounce and some stuff that has just been absolutely clobbered versus Bitcoin.
Was there anything like fundamental that changed with ETH? Like, was there kind of a catalyst for this move? Or was it just, low prices and FOMO and whatever? Like, was there something that changed with ETH itself? Because I've seen some tweets about like the ETH Foundation changing some things and whatnot. Like,
it's a great question. Last week, there was a huge upgrade to the network called Pectra.
Okay.
Basically, a bunch of Ethereum improvement proposals implemented to make the overall network faster, cheaper to use, easier to use. So there's some interesting updates or upgrades that have come to the network as a result. Does that mean that almost immediately, it gets priced in or you start to see this show up in the data? Not necessarily. But I think everybody has just written ETH off. ETH's dead. And we've seen this narrative in the marketplace before, and we've seen it move violently to the upside. And I think that you do get a pullback, you get a correction within that move, and then it has historically gone on to new or higher prices. And so maybe you're seeing some of that. But it was just so beaten up. The narrative around this versus Bitcoin was just very, very bearish, down 50% in 3 months. But you have all of this that's happening kind of under the surface, whether that's real world assets, it's larger financial institutions moving on chain or building on chain. When you look at what Ethereum in terms of its TVL is and what it securitizes, people kind of forget about that. They fall asleep in some ways. You get this upgrade, maybe that's the catalyst. But largely, it's just that this is a much higher vol, smaller market cap token. It had been beaten up, was maybe more oversold than others, and is catching a hell of a bounce here, given the whole space. I mean, you got the equity market back up at 5,800 when we look at S&P.
Yes, it's across the board.
Yeah, so I think that's kind of what explains it. But this is one that definitely was beaten up a little bit more than others.
And all you needed was a little news event,
Yeah,
it's
all it takes.
It's one little thing.
Ember.
Yeah, that's exactly what it is. I mean, because you're not like you said, like whether it's priced in or not now. That's not really the question. It's just that you needed that sentiment change to happen, and this was. It seems like it was some sort of. It was itself a catalyst.
And the other thing, I know we've talked about this before on the show, but the other thing that you see and that explains some of the extension of these moves that we're witnessing is that you have all of the short covering that occurs in the perpetual futures market. And there's a lot of leverage. And so you'll see just these extensions where, I would expect that you pull back. Maybe Bitcoin comes back down to 100,000, but it gets pushed up to 105, 106. And it's a very violent move. It's very quick. And that has to do with short covering and the auto liquidations where people are very levered in their positions, and it's global, right? 24/7. And so you see these very quick moves and they extend for a moment. Auto liquidations occur, perpetual futures funding rates shift, and then you see that market start to normalize. So I think you're seeing a little bit of that in Bitcoin. You're certainly seeing that in ETH as well, which is probably going to help to explain some of the very short-term volatility that we witness.
A bit sort of side question: Coinbase acquiring Deribit. What's your thoughts on that?
Oh, it's huge for the space, right? I don't know how accessible options will be for U.S. investors, but for Coinbase, I think that's a massive development. It's still very early stage, right? We're going to see the maturation of these markets over time as you have more participation and more size, more liquidity in the derivatives markets. But yeah, I think it's huge for the industry. It's certainly a big win for Coinbase, in my opinion.
You think that's like kind of a sign that we might be getting closer to options on spot?
Oh, I would hope so. Yeah.
I mean, like you would think of all the places, Coinbase is going to be the first mover because
absolutely, yeah,
biggest, most liquid. I mean, that's.
Yeah, I'm hopeful that at some point in the future we'll be able to trade options on chain, and against kind of those underlying positions, where the Bitcoin or the ETH or you name the cryptocurrency is the collateral.
Yeah, it's collateralized. Yeah, as opposed to like cash, which is what we trade on.
Yes. If you guys want to jump to the next slide, we can take a look at our expected moves here. So volatility still pretty low when we look at our IV ranks for Bitcoin, a little bit higher for Ethereum. Bitcoin implied vol trading at a premium here of about 10% versus a discount when we look at where the implied vol is versus realized for ETH, down about 40% or so. But implied vol picking up a little bit here, which gives you, certainly larger expected moves. Certainly when we look at ETH, bigger expected move against a larger spot price as well. So $259 expected move there takes you up to about 2,800 or so. We'll call it about 2,300 on the downside. The Bitcoin move has been right around 6,500 for the last month or so. Volatility hasn't changed much. Price has gone up a little bit, but we haven't seen much of a response in implied vol. So you have a $100,000 spot price, but implied volatility is still 45, 46%. This is something where previously we've seen implied volatility is well above 60%. It's going to obviously get you a much bigger move. But for now, we are, certainly back to bullish, have been for a few weeks. You're looking at a one standard deviation move for Bitcoin of about 97,000 to we'll call it about 110. So possibly a new all-time high in there, though these are not static ranges. Solana, same thing. Takes you back up to about 200 here. SWI, closer to $5. XRP, I know a lot of people have that on their watch list or possibly in their portfolio. 285, so looking for a 28-cent move there. And you're just seeing, again, a series of higher lows in there, higher highs, and in some cases, which is a positive thing in crypto, increasing volatility.
Yeah.
Yeah, I think with the volatility in the equity space coming back out of backwardation into contango and steepening, I would be more surprised to see Bitcoin drop below like 80 than reach new all-time highs in this vol structure environment, which is, we've come a long way from the bottom, but the market is pricing out surprise implied volatility moves now. So.
Yeah, right. We just, as I like to say, we just went through the hurricane. There might still be storm clouds on the horizon, But we had that event risk. We went through that. We saw where we traded and what happened. Volatility in equities went to levels previously only seen around COVID, great financial crisis, a couple of other times in history. And so you just came out of that. It'd be unlikely that there's going to be a shock and certainly catches people in terms of positioning off sides that then pushes you back to those lows you just came off of.
Yeah.
Possibly, but
doesn't mean it can't go down.
Yeah.
Right.
And,
Absolutely.
Markets can't go down. Like that's certainly we're talking from a volatility perspective.
Yeah. Well, I mean, let's say that it does go down. You get a pullback here. You need to see a massive move higher in implied volatility for these ranges to really reset. And so if we trade at a 46, so let's just call it about 50% implied vol for Bitcoin, then you're probably looking at a move, a pullback takes you back into kind of the mid 90s or so. Unless, again, there's something that's going to continuously result in more selling pressure there. The kind of random walk normal chop that we might expect at these levels would be, about a $6,000 to $5,000 move on a weekly basis.
Chump change.
Yeah.
Those are nothing moves.
Well, I mean,
up when it's 10K.
Well, when you think about it in in percentage terms, right now we're just really talking about something that's actually characteristically it's pretty low volatility
for this product.
Yeah, because it's $100,000. Now we're talking about okay, maybe it moves like 5%, 6%, 7% in a week. Well, we've seen it move 20% in a week. So I guess also kind of to caution everyone, vol is pretty low in Bitcoin still here.
Yeah. Which I think actually goes to, and I forgot to mention this, of your IBIT trading. That adds to kind of the upside potential for something like a leap option, where you're buying cheap volatility in a product that has upside volatility skew. You have that positive gamma, which also gets is fueled by volatility. So volatility spikes and you get the delta move. Gamma explodes too. It just means that, the asymmetry of the bet you're making is the upside skews a lot. It's very convex in terms of your upside right now. And I know Bitcoin has had a big rally, but it doesn't change the bet structure that you have on that sort of trade.
Yeah. I mean, I think we had a correction, really, which started in crypto back in February, accelerated certainly when we had the tariff announcement, and we've come back from that. So we're at levels that we were at, I don't know, January, February or so. I'm kind of ballparking it. But to put it in perspective, you have a $100,000 asset, trades at a called 50% annualized vol. So a one standard deviation on a 1 year basis is 150 to 50.
Yeah,
right. And we know that it can quite often correct by 25 to 30% within a bull market. I think that's what you saw here. Yeah. And I think that you do get a new all-time high. This doesn't mean it's going to go to 150, but that seems to be, in terms of moving towards a new all-time high, it seems to be the way that it's trading right now. Especially if we enter into a little bit more of a positive macro environment, not just in the U.S., but globally. And I think you're seeing some signs of that versus, we just came out of a period where everybody, again, was calling for recession. There's a lot of fear in the market.
Yes.
And then that tariffs were going to be the end of the U.S. and global trade as we know it. And so I don't think anyone here on this show was arguing that was even remotely close to being true. No. But that's what we've just come out of.
Yeah.
Unlikely we're heading back into that. To put it all into perspective, though, guys, let's just jump to the next slide. Here's your year-to-date performance. Most of the stuff is still down. So we're talking about this massive move in ETH. It's still down 25%. Doge is down 28% year-to-date. Solana's in the red year-to-date. And up until recently, Bitcoin, XRP, just about everything was in the red year-to-date. So I think there is some room to run here if again, things start to look a lot better from just what really matters, growth and inflation perspective over the next 3 to 6 months. And by inflation, I mean inflation accelerating back to the upside, not inflation, the boogeyman, 9 to 10% annualized. You do not want an environment in which growth, economic growth, let's just call it GDP, is decelerating and inflation is decelerating. You do not want a disinflationary environment with negative growth.
Yes.
That's what we just kind of came out of for a couple of months. Yeah. And that's where all this stuff just gets absolutely hammered. It's a terrible environment for Bitcoin. You want to short Bitcoin, you want to short NVIDIA and everything else along with it. Yeah. I believe there are signs that we're going to be entering into a more pro-growth, pro-inflation environment.
And by pro-inflation, we're not talking about the big number, inflation. Like, you want inflation. Inflation is relative to asset prices too, things going up. It's not just like the costs of your stuff. It's also like the value of your house and the value of your stocks and the value of watches and whatever else that you own currently. Those are positive inflation. That's the growth side of the equation. There's a happy median to having, the two. That's why they always try to target 2 or 2.5% inflation, because you need that positive drift. That's positive drift.
Yeah, I look at it this way, right? Look at the price of oil. Okay. That's going to be one of the best indicators of, on a forward basis, the direction of inflation. It's not the absolute level. Nobody wants, there's the chat's going to light me up. Nobody wants hyperinflation. Obviously, you don't want that. You do not want deflation. That is the Fed's biggest fear. You do not want the price of oil to collapse. You do not want to see, what happened in terms of disinflation or deflation around COVID. You don't want an oil price at 150 either. But if I'm trying to just measure how things are going to play out over the next, say, 3 to 6 months, I want oil prices increasing. Now, I don't want them going to, again, 150. But as an indicator of this, right, you want to see signs of growth. Yeah. You want to see energy usage. It doesn't, again, mean that you want explosively higher prices, but you don't want things that are just continuously trading lower. When I look at S&P sectors, I want to see outperformance in long duration assets like tech. I want to see consumer discretionary. I don't want to necessarily see consumer staples outperforming everything and fixed income proxies outperforming everything. Yeah. That could be utilities or REITs, right? You want to see the opposite of that. You're starting to see some signs of that, which is the environment that I think we're heading into, which is certainly much better for equity prices, much better for crypto prices. There's a comment about stagflation. Stagflationary environment is absolutely one of the best environments for Bitcoin. Now, it might not be great for the consumer necessarily, but asset prices typically go up. And if we're talking about making money in the markets, those are the environments in which you want to see the macro economy kind of transition into, versus one in which growth was rampant and now we're seeing a massive slowdown.
Couldn't have said anything.
So I don't know what else to say. We're headed into an environment that seemingly will be a bit better than where we just came out of.
But certainly. I'm with you.
Yeah, agreed. Yeah, I think increasing asset prices, increasing crypto prices, like, these are all good things as long as we are in an unsurprising inflationary environment, we'll call it.
Yeah, we are. I mean, we were in that a couple of years ago. We have certainly come out of that.
Yes.
Just a quick one for you guys. Just looking at the biggest movers to the upside here in the last week: ETH, Doge, Aave, and Shiba Inu. So you got a couple of memes in there, and then a big L1 and some DeFi mixed in as well. You look at this against Bitcoin, and it's all, as of recently, has outperformed, though year to date, Bitcoin, as we just showed, is the relative outperformer. And then just really quickly looking at cross-asset correlations.
Farcoin outpaces all of those, just so you know.
Yes, it does. I need to get that one on the screen.
I would like to have that added on that screen there.
I'm doing my best to get it up there.
That was a legendary call of yours, because when did we get in that? Or not we, but...
Oh, I mean, this was way back. It had to be pre-election. Yeah.
One of our first bag battles was your Farcoin trade.
Well, some of this stuff is just it's fun, right? And then you can see how a bunch of people will gravitate towards it. Attached to it. Yeah. It's it's a meme, right? Yeah. Same thing with GameStop or any of the others.
Chill guy.
Right?
Yeah, you're a chill guy.
Chill guy didn't work. Yeah. Farcoin?
Yeah, there will be another.
That's
I can promise that.
There's always more.
Quick look at cross-asset correlations have come down a little bit, but as you might expect, still pretty positively correlated here, though well off of the the 0.6, 0.7 that we saw on a short-term basis with equities. Strengthening correlation I should call out between the dollar, so UUP, dollar index ETF here, much stronger correlations between the dollar and Bitcoin as than we've seen previously. So,
and the dollar is very low right now. So if it's bouncing today, but if it continues, you're going to see Bitcoin go up too.
Yeah, strong short-term inverse correlation with gold. So gold getting hammered here on the back of that dollar strength recently. Less of a longer-term correlation between gold and Bitcoin, even though we call Bitcoin digital gold. Less of a correlation there. But yeah, just a couple things to keep an eye on in the short term. Very strong positive US dollar correlation with Bitcoin and inverse correlation, strong negative correlation between gold. Not much very short term with treasury bonds, though I think the one thing to watch out for, and I don't believe that we have this indicator in the platform, but you can find it just online. Bond market volatility tends to be pretty negative for crypto prices. So in the same way that you've seen the VIX come down pretty considerably here, as well as the bond market volatility as measured by the MOVE index. Yep. If that continues, it should be supportive of crypto or Bitcoin prices. And then, as long as, same thing here with the VIX, if that continues to move lower, it should be supportive. But the other side of that, you get a pullback in crypto.
Mm-hmm. Bond volatility down about 40-ish% in the last month or so. I mean, just as an aggregate number, when you look at the MOVE index, it's gone from 140 to 100. So it certainly is good for asset prices in general, not just Bitcoin.
Yeah. Yeah, and if that changes, then you know what to do. Sell Bitcoin, right? I mean, and that's the other thing, too, I want to make sure everybody's aware of. We're on this show to trade and to hopefully make some money in the markets. Yes. We're not here just to pump it. It's tough with Bitcoin or spot crypto because you can really only buy it. Yeah. If you want to short this stuff, you could short it with leverage in perpetual futures markets or on the CME with futures. It's a tough short, as we just saw, because it can just absolutely explode to the upside. It tends to be more volatile to the upside. But, we get these signals where we start to see a lot of this stuff change from what we're looking at today. Then it becomes, becomes a pretty good short. Or if you just have a long-term core position, let's say you own a bunch of Bitcoin, you want to sell something against that. That's then a time in which you should probably do it, or buy put options in IBIT. But there's a lot of ways that you can go in and trade that price action too. We're just kind of coming out of that. It's a bit more bullish right now.
Yeah. Collars in IBIT are an interesting way too. If you're long spot Bitcoin, because of the skew that you have to the upside, you can sell, 10 points out of the money, the call, and buy, 3 or 5 points out of the money on the put side. It gives you, again, that kind of asymmetry of more upside room relative to the downside protection is much closer at the money. So that's why it's so great finding high volatility things to trade, because you have that sort of, trade available to you.
Yeah. Especially
look at something like SPY or Qs, it's harder to do that while being long.
Yeah. And it's very apparent in longer term IBIT options like September, November. But the beauty of it is if you're just holding long-term Bitcoin, if you wait and you get a pop that's, let's say Bitcoin goes from 103 to 110 in a day or 2 days, the call premium in IBIT will explode. Yeah. And you'll even further be able to buy a put option near the spot price and sell a call option significantly further out of the money for a small credit. And that's the kind of hedging that you can deploy in this type of product, which is amazing.
Yes.
And then, of course, you can notionally match it with your Bitcoin holdings to get whatever ratio you want. But we love IBIT.
Yes.
Much to Tom's chagrin.
It's okay. It's more for us.
Yeah.
Without his rubber.
But yeah, it's not for everybody. And I'm not here to try to convince the people that think it's a zero or it's fake or anything like that. I'm not trying to convince them otherwise. But from a trading perspective, I find opportunity in a lot of these products. Hope that it continues, but we have to recognize if it doesn't.
Yep.
What you been calling him, the Oracle? The Oculus.
The Oculus. He's the Oculus. Yes.
I don't know it like that.
It means you're the seer.
Yeah,
Oh,
you
thanks.
You see all things.
I just get lucky once in a while, guys. Or frequently lucky.
Speaking of seeing things, Theta Trader says, tell Ryan Grace to tweet something crazy. Victor Jones says he trades all of Ryan Grace's tweets with zero research. I feel this claim should be tested.
I don't tweet though. See, that's the thing.
Yeah.
Oh, so those are bots.
No, we
Just-
had him on the
I'm kidding.
videos with Gus. That
Yeah,
Gus
yeah,
has been doing with the like, what do you think of 0-day options? And Ryan's like, 10.
Hell yeah. Hell yeah. Lever
It's all
up.
10.
Yeah, no, I think the last thing I tweeted was just about how, you look at the performance of gold and Bitcoin, I guess you could bucket most of crypto in this. Like, what people miss is kind of just like the structural shift that's ongoing, right? You have these narratives, and these narratives are reflexive, and then eventually they fracture. And when you can pick up on that, you probably think of this as like a paradigm shift as well.
Yeah.
That's where you can make the big money over the longer time periods when that occurs. And if you go back to right or wrong, just objectively speaking, when all of Russia's assets were frozen in 2022, it fractured that narrative. It fractured that narrative that dollar-based collateral was just pristine.
Yeah.
Well, maybe until it isn't, right? And then what have you seen since? You've seen significant gold buying, gold outperformance, significant Bitcoin buying. Nobody's out there saying that, there's a lot of central banks that are scooping up Bitcoin, but we know there certainly are a lot of central banks that are buying gold in mass, whether that's Russia itself or it's China, it's others. Obviously, the U.S. holds substantial amounts of gold. But that's what's at play here. It's not even really about the technology. Certainly you have a shift towards a more digital or digitized financial system than the one that we're in. But this is about collateral within that system that's untethered from the system itself, if that makes sense, right? And so I think that's what you kind of have to realize what's going on here is you have a shift away from dollar-based collateral. And I'm not calling for that to occur overnight. Most debt's dollar denominated, but there's certainly a shift underway, and it's into things like gold, it's into alternatives, it's into Bitcoin. So it's going to be very volatile still, but the trend should be over a very long-term period up and to the right. Because it's very early days in terms of the adoption of that, or even in the realization of what we're talking about.
Yeah.
Question for Ryan regarding IBIT share dilution through further issuance, counter to Bitcoin philosophy.
No, that's not how it works. So IBIT, it goes on net balance. So buyers and sellers, if there's more buyers, then they buy Bitcoin.
They buy more Bitcoin, yeah.
It's cash.
Yeah, and you'll see that where it's like BlackRock bought another $2 billion worth of Bitcoin for the fund.
Yes. So there's no issuance. There's no. I guess the only drag you have is the management fee, which I think is like 0.25% or something like that, which isn't even a drag. That's just something.
Well, versus just owning it yourself, it is, yeah.
Yes.
Yep.
But that's something you pay out. That's not part of there's no, like MicroStrategy trades at a premium to what its Bitcoin is. That does not exist to IBIT. IBIT trades to whatever its cash is.
Yeah. And it's if you look at the actual structure of the fund, it is just that. It is Bitcoin.
It's 1-to-1.
That's it.
And it's just based on net flows.
Yeah.
Yes.
So yeah, the dilution is not necessarily going to happen because the target of that fund is to track dollar for dollar Bitcoin performance.
Yeah, no dilution.
Yeah.
Yeah.
Which is good. Let's see. Got about a minute left here. I'm trying to find some crypto. Are you a fart coin millionaire? There would be signs.
Yeah, not yet.
There would be signs.
Not yet.
I don't own any fart coin at the moment.
Damn.
Yeah, no fart coin
God,
over
you
here.
paper-handed.
Yeah, we did it as a trade.
Oh, come on.
Sorry. I wish.
Yeah. Last one here, a theory question. The theory for buying at least some amount of crypto is the same for throwing $1 at the office group lottery pool. You don't want to be the only one that didn't win. That's kind of the argument for having some kind of exposure. It's just like if you look at the total portfolio, even if you're a professional trader, you're going to have chunks of more conservative investments. You're going to have chunks of more like S&P, NASDAQ investments, but then you're going to have a small portion of your asymmetric return possibilities because you want to have that.
Yeah. That's true of having a little fart coin in the portfolio, right?
Yeah.
So if you just think about it in terms of buckets or asset classes, right, there's an argument to have some fixed income. And within fixed income, there's an argument to have varying degrees of risk. It might be high yield and it might be U.S. Treasuries. There's an argument that you want some equities. Well, which ones, what sectors, what individual companies, right? Maybe you want some alternative assets, you want some commodities, blah, 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 blah. You want some crypto. Okay, well, is it just Bitcoin or do you want a little bit of Doge as well? There are varying degrees of volatility, various vol exposures. You can take those up or down depending on the environment that you're in. But when you run the numbers, and we don't have a ton of data, that said, I mean, almost 20 years, not quite, 15 or so. When you look at the numbers, there is a very strong argument for having that, as you mentioned, that asymmetry embedded in your portfolio because you have an asset that can only go to zero but has historically experienced returns well in excess of 100%. Even the last year was well up over 100%. And so it might not work. And yeah, it might be a 50% drawdown at times, but you want a small amount allocated to that so that when it does go up, you outperform significantly. There's a lot of evidence that suggests that including a small amount of Bitcoin specifically, and when I say a small amount, let's say between 1 to 5%, closer to the 5%, it does not have a negative impact on your portfolio whatsoever, at least when we look at historical returns. Now, that doesn't mean that that's going to happen into perpetuity, but it's not like you all of a sudden have this huge increase in vol in your portfolio. A slight increase in volatility, but the returns are absolutely, that volatility is dwarfed by the returns.
Yeah, because you're getting the realized volatility.
Yes.
And it's been upside realized volatility.
Right. There's no argument that you should have 80% of your portfolio in Bitcoin. Not at all. But when you look at portfolio construction and allocation, 5% or somewhere around that, does seem to have benefits, or at least it has historically.
One of the crazier things about trading and volatility itself is that people associate volatility with like pain, with like down moves. Whereas volatility is really where you get upside because you can only go to zero. So if you have something that has very, very high implied volatility and let's say, it's realized and the thing goes to zero, that's your cap. The realized volatility to the upside doesn't have a cap. And so when you talk about upside, you have to find something that has volatility. You do not have the same probability of upside with something that has low volatility. So if you're looking for the upside, you want volatility.
Yeah, otherwise just go put 100% of your money into
Coca-Cola.
CDs
Or CDs.
treasuries.
Yeah.
And hope that inflation, comes down over time, I guess.
Yeah. It's not my bet.
Oh, man. Well, that is it for us. Thanks for tuning in. If you've got any further questions, you can always find us on the Twitters. I'm at Trader Mikey B, Nick's at Trader Nicky Bat, Ryan's at Ryan Fred Grace, and give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. You can sign up for that for free. No reason not to have it.
Yes.
We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.